Are you looking for the real reason traders succeed? Not some fancy indicator or trading hack, but the fundamental reason that traders have been elevated to long-term trading success? If so, you're in the right place. In this limited series called Trading Triumphs, The Journey to Success, we're going to analyze the journeys of successful traders and really dig deep into what's made them successful. We'll take a look at the stories, the struggles, and the successes. We'll also look at the defining moments that have forged their trading career and the timeless principles of success and trading that we can leverage ourselves, plus some fun, laughter, and maybe tears along the way too. This won't be the usual what's your favorite indicator style of interview. This is going to get personal. So let's get to it. Brent Penfold, welcome back to the show.
Thank you, Andrew, and thank you for having me.
Yeah, I'm really excited to be talking to you today because, well, you've been on the show a number of times before, according to my notes here. A couple of the past episodes or the topics we spoke about was trend trading tactics, episode 173, if people want to catch that one on the Better System Trader website. We also talked about trading price patterns, episode 101. Plus, we had big picture analysis and principles of trading success. So 4 times you've been on the show here, according to my notes. I don't think I've missed anything there. So it's great to have you back. Thank you very much for joining us.
Oh, you're welcome.
Now, this episode's going to be a little bit different, actually, because those past episodes that we spoke about were more about the tactical side of trading and building trading strategies, testing and things like that. But this one's going to be a little bit different because we're going to, dig deeper into some of the defining moments in your trading career to really uncover, what are the principles of your trading journey and the success that you've been able to achieve. Hopefully, timeless principles that we can all use in our own trading journeys as well. So, how does that sound? Does that sound good?
Oh, it's fantastic. It's fantastic. When you brushed it with me, I just thought, what a clever idea to approach trading from a different angle, completely different.
Yeah, thanks. I think there's a lot of trading podcasts out there, and a lot of them are just kind of regurgitating the same old information. How do you trade? What's your favorite stop loss, your indicators, all that kind of stuff. And that changes over time, right? It's not really like a timeless principle that can help people throughout their trading journey. So that was the idea behind this new angle, and I'm glad you're on board with it because
I think it's fantastic, very clever.
Yeah, there's a couple of very unique things about your trading approach and your trading journey, which I'm really interested to be digging into today. So I think this is going to be a marvelous chat. Now, what I wanted to start with was the very beginning of your trading career, because I think there's a couple of ways that people get into trading, and depending on how you start can sometimes be a big reflection on how you go throughout your journey. Now, you got started, I believe, trading at Bank of America, which your very first position. And I think you kind of stumbled into that somehow. I'm not exactly sure. So if you'd like to, take us back to that moment when you first started considering trading and how it all happened with Bank of America.
Oh, for sure. That really is, if I reflect back on, where I started and where I am today, that is the number one defining moment was being fortunate enough to get picked up by Bank of America. And it was completely left of field. I was at university. I was doing a Bachelor of Commerce, and I was enrolled in the honors program, and I was between my 3rd and my 4th year. And I was talking to my dad about what I wanted to do with my life, and he'd been retired for a long time, and he really had no connections with industry, like contemporary experience with what was happening. So he recommended I go talk to his accountant, our family accountant. And my family accountant said to me, well, Brent, you can always employ general managers to run operational factories. But in my opinion, what you need to understand is how money moves around. That's really important. You need to know how money moves around. So, I didn't wake up and think I want to become a trader. I was just interested in business, and I was doing a major in finance and accountancy, and I was doing my honors in finance. and that's all I knew. And so the family accountant said, well, why don't you get a summer work experience with a merchant bank and understand how money flows? So that sounded like good advice. And so I just wrote off to all these merchant banks, and Bank of America kindly offered me work experience, 3 months of work experience. And they did it on the condition that if they liked me and if I was successful in my honors program, that they'd have first call on me, like an option on employing me. And so I said, for sure. And I had no idea what I'd be doing with inside Bank of America. I just knew, bank. Back then it was a merchant bank, right? I didn't have a banking license. It was a merchant bank,
right?
And so I was excited, just for 3 months during the summer holidays. And there's two levels of why I was so lucky. So I can't be given any credit for ending up where I ended up at Bank of America. It was just total coincidence and just an alignment of the stars. So first of all, they offered me work experience. And then I can remember when I went up to the guy who's my main contact was a banker, and he invited some other people in, and they just spoke right in front of me, and this guy was just a little bit confused about where they'd put me. And so I was just like on the spot. I said, how about we put him down in the money markets, and we'll have a month there in money markets for Brent, and then the second month he can come up here and spend a month with us, and then the third month we can decide then. So they put me down into the money markets. So the first thing that was very lucky for me was got advice from my family accountant. I applied. I got offered the position. And the guys at Bank of America put me down into the money markets. So you have to understand that at the time in 1983, I'm not sure if you remember, but Australia was going through a deregulation of our financial markets. Okay, Paul Keating, who later became our Prime Minister, he was our treasurer. And I think he's one of our most successful prime ministers in this country. Like what he's done with the financial markets deregulating, what he's done with compulsory superannuation, I think it's brilliant. And he was funny as hell. Do you remember? He used to just sledge everyone in Parliament. It was so entertaining. So when I was in the money markets, we had basically Forex and domestic money market. We had a cash desk and a securities desk and a bond desk. They put me on the cash desk, which was aligned with the security desk. At that particular time, in December of 83, everybody was speculating, based on this deregulation, that Paul Keating would float the Australian dollar. And so everybody was speculating that our currency, which was fixed, and when a currency is fixed, the central bank has to deal with everyone who comes to the window. If you want to buy Australian dollars, your central bank has to sell Australian dollars to that foreigner. And if a foreigner wants to sell currencies back to the central bank at the window has to buy it. Yeah. And so everyone was speculating, Paul Keating wants to make Australia more dynamic, more progressive. They will float the Australian dollar. And so everybody was buying Australian dollars. And, you got to park your money, somewhere for a couple of weeks or whatever it was. And so all of these speculators were buying short-dated securities. And I was sort of working on the promissory notes. So we're trading Tom Hardy? Yeah, not Tom Hardy. Hardy Industries. Promissory notes, right? And bank bills. And I witnessed on that particular week when I was, when I understood what was happening. It took me a few weeks to work out what was happening, right? Because I was brand new to this. I saw the domestic, money market desk make over $1 million. Mm-hmm. $1 million. It was just, Brent, go buy some, Hardy promissory notes. Well, you buy it and you sell it. And he's taking a big clip on everything on the way through. And that was driving short-term interest rates down because everybody was wanting just to, buy some short-dated paper. And so I was basically imprinted. I was like a duckling. I was 21. I was the youngest on the desk. And I'm going, I was just blowing my mind. I didn't come to Bank of America expecting or wanting to be a trader. I was there on work experience. They taught me how to balance the cash book. They taught me how they bought and sold these short-dated securities out to 90 days, bank bills, promissory notes, certificates of deposit. And basically we had to buy as much because all these clients were wanting to buy it from us, so we had to buy it from somebody else. We sell it to the clients, and the P&L each day, it was unbelievable. So what an experience that is. Like, I didn't ask for it, didn't want to. I didn't go out there to ensure that I was in a trading environment, and that was brilliant. So my head was spinning. Second month, I went up to banking. And that was probably that was just not as exciting. And do you remember Alan Bond? He was at that time, I don't think he was looking to do Channel 9, to take over Channel 9. I think he was looking to buy one of the big pub breweries, and they, obviously approached Bank of America. So they gave me Bank of America, the banking department gave me all of these lever arch binders to look at Bond Corporation and to come up with an analysis. And should Bank of America, get involved in financing his activities? And they put me in the boardroom, and we were basically in Macquarie Street, 13 floors up. So we're looking down Sydney Harbour, magnificent, unbelievable views. And I can just remember that I was reading these. I was falling asleep, and I think I did fall asleep. It was just, dead set. Just looking at these balance sheets and these reports, and it was awful. Anyway, because of financial deregulation, everybody was speculating that Paul Keating would invite foreign banks to take up a foreign banking license, and so Bank of America were very confident they'd get one, and so. They were, at the meantime, while I was there, I had no idea, but they were actually renovating another floor in the block that we were in to open up a brand new trading floor. And Neville Rand came in, and he officially opened it up. And basically that was like January, I think, in January 84, I think. And basically they approached me and they said, Brent, we really enjoyed your time with us in the money markets. We're basically opened up this brand new trading room, and we're looking to employ traders. And we'd like you to join the short-term security desk, because we want to get a foreign banking license. We expect to get a foreign banking license. We would like to employ you. And of course, my memory of the whole domestic money market desk was making all this money, and I was hooked. So I got this full-time job offer. So I took my Bachelor of Commerce. I didn't do my honours degree. And I started on the domestic, my full-time job was on the short-term securities desk, looking after the promissory notes. And so I got to thank the family accountant for giving me advice to, understand how money moved around the system. I have to thank Paul Keating, because he was involved in deregulating our financial markets. I have to thank speculators who were speculating on the Australian dollar being floated, coming in and basically buying everything they could find. And we're just taking clips on the way through, making $1 million, which just spun my head. And I thank Bank of America that they invested all this money. And when they opened the trading floor, it was the most sophisticated trading floor in the Southern Hemisphere. Each trading, we had 3 terminals. Each trader had 3 terminals for the brokers and stuff. It wasn't Bloomberg back in those days. It was a whole bunch of monitors. It was fantastic. Yeah, and I got to thank Bank of America for giving me the opportunity. And that's where it all started. I didn't ask for it. I didn't search it out deliberately. It was just a great alignment of the stars. So I was I was blessed.
Yeah. It sounds like in that period when you were there, that the amount of money or the potential to make huge amounts of money was left quite an impression on you. Do you think that had some benefits or disadvantages with your expectations later on, like by being nurtured in that kind of environment from the beginning? Was that was that an advantage or a disadvantage?
Well, yeah, yes, you're right. It's a two-edged sword. It gets you excited about what's possible, and that was brilliant. And this is what I suppose. It's bittersweet. It's sweet that you get this opportunity. It's bitter because your earliest impressions are the impressions that get imprinted the deepest. and they're the experiences that are really hard to let go of, and that was the downside of my time at Bank of America. Like I loved it. You know, I went from, you know, I ended up being the manager of short-term securities on the securities desk, where I looked after the bank bills. And then the Bank of America at the time had a worldwide recognized training program for Forex, you know, for corporates who had foreign receivables and payables, you know, so for international businesses that, you know, traded in all currencies. So Bank of America had a really good software for corporates who had a large treasury department to manage their Forex exposure. And to help sell those services, Bank of America had a training program that they took around the world. And when I was at Bank of America, they had brought it to Sydney. And what they also did, they would invite employees to also be involved with it, so that it was a full-on thing. They had a team that flew around the world. When they came to Sydney, they invited me to participate and some other staff members from the money market desk. And essentially, they took us off to a hotel. They buddied us up. They essentially linked all the hotel rooms to a central computer. They for 2 days, they taught us about, you know, central banks, about currencies. And then on the third day, they had a trading competition where they would send alerts on the monitors, you know, like some announcement of a central bank, you know, what should you do, buy and sell, and which currencies. And anyway, I won that competition. And because I won that competition, they invited me, put me onto the FX desk. And so I went from the domestic securities desk to the FX desk. And because my background was securities, they put me on the forwards. So forwards is just a different name for, you know, foreign interest rates, because forwards is just the spread between domestic interest rates, foreign interest rates, and what the spot is. So why I bring this up is that I had an amazing education, right? But on top of that education, I was introduced to my first form of technical analysis, which was Elliott Wave. And Elliott Wave, it you know, I became a disciple of Elliott Wave, and essentially at Bank of America, you know, like all banks, you know, you are prohibited from trading in the markets where you manage a book for the bank, right? So we were a bank, right. So we basically just did, you know, deposits, short-term securities, long-term securities, and FX. And so it was okay for us to trade on our personal accounts, equities. And what we all did in the trading room, we all basically punted on the Australian index futures contract, the SPY. Now, how's this? I still remember this. My first trade was on bank card, which is back then, it was like MasterCard or Visa card, right? And I wanted to do this. I was 21 or 22, and I spoke to my broker, and I said I wanted to put a trade on, and my broker said, "That's fine, Brent, but we need the deposit." I said, "Oh, do you take bank card?" And she said, "Yes." So she took $2,000 off my bank card. Anyway, I still remember this, and this is my manager, the treasurer, was a fantastic guy, unbelievable guy. All the guys I work with, like today, they're all hot shots around the world. They're unbelievable. Like I'm the loser compared to my peer group. I mean, I was the baby. I was the baby on the team. But my treasurer, Peter Nielsen, he's now in charge of a British bank, CEO. Wow. Yeah, he was brilliant, lovely guy, and he had, you know, an awareness of Elliott Wave and Fibonacci, and so he just sort of, you know, just sharing us stuff. Like he wasn't, you know, trying to indoctrinate us. He was just saying, this is the tool. You know, this is interesting. And it is interesting. It's dead set. It's interesting. I can remember I was with Steve and he was on bonds. I was on the short-term stuff. I can remember watching the SPY come down tick by tick by tick to like a 0.618 retracement. And we bought it right on that 0.618, and the thing took off. And boy, we just thought we were geniuses. And so how's that, hey? You know, basically being introduced to Fibonacci and Elliott Wave, and then putting a trade on just to pick up the 0.618 retracement, and a working, well, yes, it was thrilling that we made money and was successful, but the downside of that is that imprinted me. And so for a long time, I became a disciple of Elliott Wave, and essentially, I blew up 2 accounts, and I almost blew up a 3rd account, but before I stopped, which was basically suffering a 50% drawdown. And so my whole experience was brilliant, but the downside of it was that I was indoctrinated. I mean, I was the world's expert on Elliott Wave. I bought and researched every book on Elliott Wave. I had deconstructed Elliott Wave. I had all the rules, and I wasn't a nut job that was talking to everybody on the street saying, "Do you know about Elliott Wave?" But if somebody wanted to sit down, listen to me explain Elliott Wave, I could have talked to them for a month.
Yeah. Right.
So a wonderful experience, but the downside of it, the dark side of it, was that I was introduced to Elliott Wave. I embraced it. I had some early success, which reinforced its value to me, and it took me a long time, an enormous amount of time and money to basically walk away from it. And I will say, even to this day, I still can't help counting waves. That's how imprinted I was as a 21-year-old.
Yeah. All right. Well, I'm going to come back to Elliott Wave in a minute, but I just want to take a moment to ask you about, I think you made a really good point there, and maybe it was kind of skipped past, but that you're talking about the first experience of something really imprints into your mind. And so I was thinking, there's a lot of people who watch this show who have been trading for quite a while. So I think for them, the value is just recognizing, where is this belief about trading or this insight about trading, where did it really come from? But then also I'm thinking, like, for people who are just starting to consider trading, there's a couple of ways that you can, probably multiple ways that you can get into trading. You can take the path you did, go to a corporate or a bank, a financial institution, go through and learn trading through them. You can go and read books and whatever, figure it out yourself, or find a guru or a mentor and do that. So looking back now on what you've done and the insights you've got from your journey, would you recommend the way you've done it, or how would you recommend people consider or think about their first experiences in trading?
I would recommend, if you can get a job at an institution and be introduced to the market, if you could do what I did, with the one proviso of being, hey, welcome all ideas, but I don't think whatever you hear is the only way to do something. Just have your eyes wide open. But absolutely, if you can go into an institution that's operating in the markets, whether it's money markets, forex, or equities, absolutely, because the big institutions have the resources. Like, I had a wonderful boss. Like, he was brilliant. He was so nice, and he introduced me to a tool. It's just a tool. But being young and ambitious, and full of energy, and then having that first success, I dived probably a bit too deep into it. But my advice would be to people is just listen. Listen to all ideas, but just at the end of the day, understand there's more than one way to trade, right? There's more than one way. There's many roads that lead to Rome.
Yep.
Yeah. So don't get too hooked on one. And because institutions, they've got the resources to teach you. Like, you do it for free, and you get paid. You get paid, and more importantly, when I'm trading, it's not my capital. I'll tell you, my biggest loss. I'm not sure if you remember, but do you remember when Paul Keating made a comment, described Australia, was basically a banana republic?
Yeah,
he was treasurer, right? Or was he prime minister? I don't know, but it was either the treasurer or the prime minister. It was probably the treasurer. He probably wouldn't have said that if he was the prime minister, right? But he inferred that Australia, he called Australia a banana republic. Well, guess what? At that particular time, I had my largest bank bill position on, and I lost $1 million over that weekend on my book. $1 million, when $1 million was a lot of money. And I was so sick. I was just physically unbelievable. Like, the bank wasn't holding against me. It was just, shit happens. like a black swan event. And it wasn't my money, but I still felt really sick and really, really ill about the whole thing. It was unbelievable.
Yeah.
But the upside is that it wasn't my capital. So, yeah, if you can get a job, it's funny. Today, there's far more stimulus out there to introduce people to the idea of trading. 40 years ago, when I was at uni in 1982, there was no iPhones. There was no real internet. There was no big stories about big traders. There was no awareness. There was no awareness. I didn't have that. Like today, there's a lot of awareness, a lot of half the ads on TV are basically trading. So people today have a much better opportunity to become aware of it, which I didn't have. But I think today there's heaps of institutions, obviously institutions who trade. And if you can get a job, absolutely, because you know what? You're basically trading for free because it's not your capital.
Yeah.
Yeah, absolutely.
Yeah. All right. Well, I want to move on a little bit, Brent, because you were talking about Elliott Wave just a moment ago, and anyone who knows you knows that you're a systematic trader now. So I think that it would be interesting to hear how you made that switch. And it sounds like that was another defining moment in your trading career. So can you take us back to that moment when you realized that maybe Elliott Wave wasn't the way forward and perhaps systematic trading could be
absolutely. This is the second biggest defining moment. And so I left the bank and I was trading. And as I said, I blew up twice and almost blew up a third time. My broker was a small brokerage firm, and he had a partner. And I'd always ask for my broker, and the team would answer the phones, and his partner wouldn't really talk to me. I wouldn't talk to him. I didn't want an opinion. I was just doing execution. I had my ideas. And then one day, I called up for my fill. I knew it'd be a loss, right? Because I had a pager back then. I had a pager, a little pager you had on your belt, and you could watch the prices. And I knew I'd be stopped out, so I was ringing up to get my fill. But my broker wasn't there, and his mate Jeff picked up the phone, and I said, "Hi, Jeff, it's Brent here. Is Alex there?" He goes, "Oh no, he's out to lunch." I said, "Oh Jeff, I'm just ringing up for my fill, and I imagine I've been stopped out." And he said, "Yes, Brent, you've been stopped out." I've never had a conversation with Jeff. It's just politeness, just order fills, taking an order, giving the fill right. Anyway, I was so despondent, and I never asked for an opinion because when you're out of institution, you have confidence. Like you don't listen to people, you do your own thing, right? So I never used a broker to give me ideas. I was always independent like that. But I said to Jeff, "Oh, Jeff, this market, Jeff, what do you think is going to happen?" Well, Jeff just calmly said, "Well, since the SPY has just had 3 consecutive higher closes, which means it's just completed its medium move to the upside, I wouldn't be looking to buy it. I'll be looking to sell it." The next day, the SPY fell away. Well, for me, it was like Las Vegas, Hollywood had suddenly occupied my head, having a party. It was like an enormous light bulb just turned on.
Yeah.
And I've never heard anyone talk like that about the markets. The market has just completed its medium move. So I wouldn't be looking to buy it. I'll be looking for opportunities to sell it. And the market came off. I've never spoken to Jeff. And that was basically the beginning of the knife that would basically separate me from Elliott Wave, which was discretionary trading, to separate me from that, to move me onto the pathway of looking for evidence-based trading. Put me on the pathway of basically trading with observable statistical odds. And that made me find out more about it and made me learn to discover this thing called mechanical trading. and put me on the path of looking at simple price patterns. And that was essentially my huge light bulb moment. And then Jeff, his name's Jeff Morgan, he became my mentor. And I had no idea. I've been talking to him for years, just in, him passing me on to my broker, or him just taking an order from me, or him giving me a fill. And Jeff Morgan, basically, he is the professor or the teacher that you would have loved to have had at school and at university. How he just distills things down into, not only is he smart, but the way he communicates, just really, really clear. And I talk about him in my book, The Universal Principles of Successful Trading. In the back of my book, I talk to my friends. I ask them all for one piece of advice, and Jeff Morgan's in there. And it was such a defining moment. It was just unbelievable. And Jeff, and then after talking to Jeff, and then we started to spend a lot of time, and he left the brokerage because he only went and became like a client advisor to essentially, fill in the missing gaps in his trading education. So that's one idea. One idea is to become a broker. A great idea. Actually, if people want to get my book, The Universal Principles of Successful Trading, read the chapter.
Just happen to have it here.
Yeah. Read the chapter about Jeff Morgan. He was my mentor, right? He's my mentor, and you'll see his story. And so his pathway, he actually went off to become not a principal like an institutional dealer that I was. He went off and became a client advisor or a broker. So that's another pathway. And guess what? He was a client advisor for 5 years, right? They had hundreds of clients. And I'm not sure if you remember reading this, but in the 5 years that he was a client advisor, guess how many traders they had that actually made money?
Just you?
No. I was a loser. I kept losing. I was trading Elliott Wave. No. Guess how many traders had clients? He had hundreds of clients. Now, it's a small brokerage firm, but they had hundreds of clients. Great personable service. Guess how many traders actually made money?
I don't know. I don't imagine it would be a large number.
One. I always believe over 90% of active traders lose. But with Jeff Morgan's experience being on the inside, it's like 99% of his customers lost. And I was part of that. It was my Elliott Wave, right?
Yeah.
Anyway, great story. So that's another pathway people can go down. Go look, work for an institution and go on the client advisory side, and just see what the majority of people do, and try and avoid the majority of their mistakes. Yes, that's another pathway. Anyway, Jeff's so logical. Basically, his background, how's this? He put himself through university by going to the racetrack and playing the odds between the bookies. That's smart.
Yeah.
Now, this is in the 70s, right? And he said when Randwick was closed because of rain, he and his mates would basically fly down to Melbourne, which is only an hour away, and go to the Melbourne races. Now, back in the 70s, airline tickets weren't $150, $200. They were like $400, $500. But he'd pay that to get to the racetrack, to play the odds, to basically put himself through uni. And also, and I talk about this in the book, he wrote a book on how to play backgammon, how to win backgammon with a strategy. Because you can remember, he himself read a book or a comment when somebody said, backgammon, it's random, you can't, there's no way you can sort of, I don't know backgammon, I don't play backgammon, but this guy said, backgammon's a random game, you can't win it. And Jeff said, no, yes, you can. So he wrote a book on how to basically mathematically win in backgammon. And Secudo, that sort of crossword, that puzzle.
Yeah.
He's written an algorithm basically to solve any Secudo puzzle. Yeah, Jeff. Yeah. Jeff Morgan. So once again, luck that I got a job offer with Bank of America. luck that at that time there's deregulation, and Bank of America was going to apply for a foreign banking license, and so they opened this brand new big trading room so that there was a position for people like me. Luck that Jeff Morgan was my broker's partner. Luck that he's so smart, and he just told me it's market's gone, it's medium move. Why would you chase it? And that led me into basically trading short-term patterns, looking for a statistical edge in short-term patterns, and that's where I started trading the SPY. My success was basically making money on our index, our share price futures index contract, which is like the S&P 500, trading simple repetitive patterns based on combinations of closes and opens and highs and lows. That's where it all started.
So I want to dig into that transition from this addiction to Elliott Wave into systematic trading.
It was and you're right, it is an addiction. It's an addiction. And what I was feeling, and I'm probably not unusual, is that I felt Elliott Wave owed me. It owed me because I blown up twice, and almost I suffered a 50% drawdown on my third attempt, right? And so Elliott Wave owed me on a couple of levels. I wanted my money back, right? But worse than that, it owed me a dividend on the amount of time and effort I invested in learning and applying Elliott Wave. Does that make sense?
Yeah.
And when you are determined, you don't want to give up. You don't want to say no. You don't want to, and that's a good trait to have, that you just don't want to give up. And I don't want to ever give up. Like you don't want to give up. Like nobody wants to give up, right? And so that's why trading is trading is so difficult for the ordinary person, because the ordinary person comes into trading to basically, they're emotionally disorientated. Now, I came into trading not to lose. I came into trading to win. And so, I don't want to trade and lose on half my trades. I'd prefer to win on most of my trades. So you focus on accuracy, which is only one part of expectancy. So that, screws your mind up. You come in to make a lot of money, right? Well, you don't come to trading just to nickel and dime it. You come into trading to make a ton of money, right? Yeah. Which is the opposite of good money management, right? Yeah, because you trade a lot to make a lot, and you trade a lot to make a lot, and that's the worst thing you can do in trading, because you're over trading in terms of money management. It's just and then you get imprinted, and when you're really determined, and most people who come to trading are successful. They are successful people, and that's because only successful people have risk capital they can lose, right? So successful people are successful because they've got persistence, right? They don't give up. Yeah. Now they come in with the wrong attitude. Only now in hindsight do I know that the attitude of wanting to win all the time and make a lot of money is a poor attitude or objective to have, right? I only know that now out of, with hindsight and experience. But you also come in being really determined and really persistent. And successful people are determined and really persistent. And where that brought me undone, it took me like 10, 15 years to let go of Elliott Wave. Because it owed me. It owed me for the capital I'd lost, and it owed me for the time I'd put into it. So for me personally, I could not make Elliott Wave work for me. But God, I persisted and I persisted and I persisted because, I want to be successful, and I don't want to feel, I didn't want to admit to myself that I'd wasted all my time with all the effort on Elliott Wave. Yeah, really hard. Dead set, really, really hard. And it was, and it was Jeff Morgan's voice. That's what cut through the fog, the Elliott Wave fog for me. That's what cut through it for me. So, I had money. I mean, you just save up money and you open up again. So money wasn't an issue, although I was pissed off that I was, on my way to blowing up a third time, but that just would make me more determined. I'll crack this Elliott wave. I'll just work harder. I'll just count more waves. I will just learn more about Fibonacci. I'll just go do it. I have to do it better, right?
Yeah.
So the money wasn't the issue because you can just stop, save up, and go again, right? But it was Jeff Morgan's words that cut through this fog in my head and helped me to cut the umbilical cord I had with Elliott Wave. Yeah. That was dead set hard. Yeah, a decade at least.
Wow. Okay. Yeah, I think that is a very big challenge for traders, and not just in trading, right? I think is it called sunk cost fallacy or something like that, where people have invested so much effort, time, and money into some particular thing that they don't want to leave it.
Yeah, because to leave it is to admit failure.
Right.
And nobody wants to admit failure. It's like how people are bad losers, right? People are bad losers. They won't take their loss. They'll move their stops thinking, they'll give it another excuse why the market can, work against them. So they'll just move their stop. They'll just move their stop because they don't want to accept that they're wrong. Yeah.
Right. So you had the voice of Jeff that was helping you get over your Elliott Wave addiction. Although it sounds like you're still struggling a bit if you're still counting waves all these years later.
And I will say, so some of my mechanical systems, some of my repetitive patterns I trade do have an element of Elliott Wave in it.
Right.
And I'm a purely mechanical trader now. I do not take discretionary trades now. I keep it simple. I have all my, a backtesting analysis. I trade a positive expectancy approach, but we'll say there are components within there that have elements of Elliott Wave, without a doubt. Yeah.
Yeah. So you had the help of your mentor Jeff to help you in that transition period. What would you say to other traders who are perhaps going through that transition period now? Were there other things that kind of accelerated you or made it easier for you to transition that can apply to other people?
Once again, everything that happened to me was pure luck. But my recommendation is, what was Jeff to me eventually? What was he to me eventually? How do I eventually refer to Jeff? I refer to him as my mentor. That was only after being getting to know him on a different level, right? So my suggestion is, if you want to trade, hey, go work for an institution, become like a client advisor. Don't risk your own capital. Certainly read everything you can. Watch what all the mistakes other people make, and then get yourself a mentor. Like the whole master-apprentice relationship is one of the oldest relationships on the globe. You need somebody who does it to, educate the next person, the apprentice. So I'd recommend people, find somebody who actually trades, who can be a good example for them. Get somebody, read everything, do your education and all of that, but try and identify somebody who actually trades, right? And that's why, in my Universal Principles book, I talk about this idea of test, that once you've got a way of trading and you think it's wonderful, I don't think people should paper trade. I think paper trading is just a waste of time. Paper trading, right? Because you're just trading with yourself and you're kidding yourself. So my test thing is, once you have a methodology that you think has an edge, as a positive expectancy, and when combined with a sensible money management approach, it gives you a 0% risk of ruin. So once you've got to that 0% risk of ruin spot, like you're dead set convinced you've got the right methodology applied to the right money management approach, which will produce you a mathematical 0% risk of ruin, right? So you think you've seen 3 green lights. That's when you should get a buddy and say, can you help me? I want to basically trade my strategy real time, but not with real money, where you send 30 emails to a trading mate. So he becomes a broker, and emails are time-stamped, right? So that's why you've got to basically be, it's like a bit of a mentor type relationship where you've got to have somebody who's not you, who's got to be honest with you. you know, without you risking money. So my test, 30 emails for a 30 emailed simulated trades test. 30 emailed simulated trades test. Do that with a trading partner, because when you send your email off, like today, what am I doing? Like right now, what am I doing? I've only got about 10 orders today. So basically, I'm looking to sell copper. I'm looking to buy lean hogs. I'm looking to buy sugar. I'm looking to buy wheat. I'm looking to sell the Japanese yen. I'm looking to buy the 5-year treasury notes. Yeah. So I know exactly what I'm doing. I know what my entry levels are. I know what my stop levels are. I would send it off to my mate, right, on an email. Now, he would have got this email on the weekend. And so he knows, Brent can't lie now because I've got this email. It's timestamped. This order is good for 24 hours. And he's going to look at the markets. Once the market's finished, he's going to go, Brent's gone short copper. You know, he's bought hog, whatever it is, right? Yeah. And he basically he runs my trades. And then tomorrow, overnight, I will have markets move around. I will have positions. Some will get executed, some won't. You know, I'll give him my order instructions for the next 24 hours. And so you need a buddy who's really happy to work for you, but then you can work for them. You say to them, I'll do the same thing. I'll become your virtual broker, and I'll record your trading in a spreadsheet for 30 days. So that's like a mentor type relationship. So if you can't find somebody who actually trades, then follow my suggestion of 30 emailed simulated trades to your trading partner, right? Because you're not trading real, it's obviously simulated, but you're introducing an arm's length third-party person who knows exactly what you're doing, right? And you can't lie to him. He's going to say, no, Brent, I've printed off all these emails. I'm going through. I've seen what the markets have done. But you know you got long or short. Oh, you know you got stopped out. You know you're still short. And after 30 days, see what happens. So definitely do that. And because you've always got a mate who's interested in trading, you know, and you can provide the same service. It takes a lot of effort to be a virtual broker, but if a mate could do it for you, you could do it for them. Yeah. And then see how you look after 30 trades. And if you've got a positive result, then that's when I think you should seriously consider, you know, implementing your strategy. And ideally, if you've got someone you can talk to, do it. And that's one of the reasons why I offer 90 days of live trading after my workshops. So I've got my annual workshop coming up this weekend. And what I offer is that following the workshop, I give a bit of time for the students to verify what I say. And then I pick a date and I say, okay, from this date, I'm going to commence, you know, your 90 days of live trading with me, which is no big deal because I trade all the time, right? So if I was doing my live trading right now, you know, my students would be seeing all these orders, and I get all these orders before the market's open. And so they can watch it and they know whether I'm, you know, getting executed and long or short, getting stopped out. And so I try and offer an opportunity where students can actually watch somebody walk their talk and demonstrate that it's a business and it's repetitive and it's about making new habits. But the important thing is, yes, most people want to go alone, but if you can get somebody, you know, to bring them into your orb sensibly, not just to hear an opinion, right? Not just to hear their discretionary analysis of something, but, you know, to be serious about it. Very positive, very positive. And I had Jeff Morgan. Once again, I didn't set out to have a mentor because, you know, I'm ex-institutional. I'm a big shot. Bank of America, one of the largest banks in the world. Fantastic, brilliant, great bank, right? But it basically was the second most important thing in my life was having that conversation with Jeff. And from that conversation, I moved from discretionary to mechanical, trading repetitive patterns, and essentially becoming a mechanical evidence-based trader.
Yep. That sounds like a really kind of neat approach, I guess, to implementing accountability and transparency in your trading,
Yes,
especially
yes.
when you're learning new strategies and things.
Yes, yes.
Yeah.
You got to basically, sure, you can do all of your investigation analysis by yourself, but before you put real money in a real market, put the spotlight on what you're doing. Have transparency. Have somebody look at what you're doing. Get a mentor who's saying, "Well, what are you doing?" And then please follow that process of 30 emailed simulated trades to a trading buddy, right? Like a virtual broker, right? Place your orders. Do it seriously. What are your setups for the weekend? What are your orders for Monday? Mail them off, and then when it comes Tuesday morning, run all your models, do all your data collection, do all your trade managements, email it off to your trading partner. So they're your virtual broker. And then, they're going to send you back a report in 30 days and see how you're going. Introduce that transparency and accountability. That's a huge thing. Yeah, somewhere along your educational pathway, there's got to be a vertical that says, where's the transparency? Where's the accountability of what you're doing before risking money? Because ultimately, when you do start trading, that's the ultimate accountability, is your account balance.
Yep. Exactly. All right, I want to move on to the defining moment number 3. So, being an evidence-based trader, there needs to be an ability to test ideas, backtest strategies. Now, you're the only person I know who uses a particular well, maybe not a platform, but I'll use the word platform here. But a particular backtesting platform. I haven't heard anyone else test their strategies using this bit of software. So I'll let you share what that is. But can you take us back to that moment when you decided that was the path you were going to go down, this really kind of uncommon way to test strategies?
Sure. So I think my first chatting program I had was called Supercharts. Supercharts, does that ring a bell? Supercharts, back in the 90s, early 90s, Supercharts.
Sounds like something, yeah.
Supercharts, yeah, that was just a standalone chatting program. And, it just, like many people, I used it to help me count waves, I'd play with indicators if I was bored, and that was all wonderful. And so I did have a third-party program, and I'm sure it was called Supercharts. People can correct me, but it was just a standalone program, and it just showed you bar charts, and you could do what you do. Anyway, in the 90s, the number one trading program or trading package was called Supercharts. I gotta show you this. You see him?
Yeah.
I went along with a mate, and this mate of mine was one half of brothers, and they basically became institutional traders for themselves. And it's basically I had 4 close friends, trading, and I include Jeff Morgan in that. Jeff Morgan and I were like the private traders, and then so it's 5 people. And the other 3 people, they went down the institutional route, basically trading, but institutional money. And the brother I went away with, they were super successful. They basically got their business up to about $500 million funds under management. And then they got approached by a huge UK hedge fund. And so they basically sold their business to the hedge fund, and they're still there today. And rather than being owners, they're now portfolio managers, and the hedge fund has let them just keep what they were doing and just doing it under their umbrella, and now they're managing $5 billion.
Wow.
So myself and the brother, and I don't mention his name because even in my book I talk about them, but they just don't want to be. They're really humble people, and they just don't want to have any what do you call it? Attention. Yep. So I'm not going to mention his name. TradeStation put on a huge expo that they ran over a weekend would you believe, at Disneyland in Florida. So this came from Disneyland in Florida. And so my mate and I, we were so excited. We jumped on the airplane and we went and basically spent a whole weekend at this fantastic trading conference run by TradeStation. And TradeStation back then was the #1, charting and backtesting program. And I got so excited, I bought TradeStation. So I didn't have TradeStation. I had Supercharts. So I spent, back then it was worth $4,000. And
wow.
So I bought it anyway. Yeah, so this reminds me of
So what is Mickey wearing? That Mickey figurine? Is it like?
He's the magician. He's
the magician.
Yeah, the magician.
So that ties into the magic of the markets, right?
Yeah, the magic of the markets. I still have him. So Mickey's probably 26, 27 years old now. So there you go. There's
wow.
Mickey. Still have him. Love him.
That's probably a collector's edition now.
It is, yeah.
TradeStation.
Yeah. So anyway,
yeah.
I bought TradeStation. I was so excited. I got home and I opened it up, and I basically couldn't wait to get into back testing, because I was into now patents, and that's why I went to the conference to sort of learn more about mechanical trading. And and basically I opened it up, and I was just just so disappointed, because I opened up EasyLanguage, and it's a cliche, but it just didn't sound so easy. I went, my God, all this syntax, this looks like a programming language. And I was just so disappointed. And I thought, it's BS. I actually really thought it was misleading advertising, because it wasn't easy. It was a lot of syntax. And anyway, funny this. Anyway, so I was basically gutted. I spent $4,000 on this thing, and it did not excite me. And I was so despondent, and it took me a week to process what I'd do. And I basically thought, God, well, I need to be able to code up my ideas, right? I need to code up. I need to start getting evidence of what I want to do has an edge, and it's profitable with brokerage and everything. And so I decided, you know what?
You got another figurine there, have you?
I got something.
Okay. Go on, bring it over. I've got to see this one. Oh my goodness, what's that?
Can you read that?
It's back to front, but market arbitrage, spread arbitrage.
Micro arbitrage?
Micro. Yeah.
Micro arbitrage?
Yeah.
Yeah. Well, would you believe, after I left Bank America, I developed an arbitrage program with a partner.
Yeah.
And this is it. It's oh God, I'm not sure. Can you see this? This is the program. It's just arbitraging the basically the short end of the yield curve.
Right.
And I bring this up because and I was really successful. I was selling these for $25,000 a pop to merchant banks.
Wow.
And corporates in Australia and New Zealand. So that's my only copy left. Anyway, I bring it up. Hang on. I bring it up because I had a partner. So I had the ideas because I basically was in charge of the short-term yield curve at Bank of America, and I also had experience on the forwards on the FX desk. Yeah. So, arbitrage. So it doesn't matter what currency you borrow in or what currency you invest in, as long as you got liquid markets in the spot market and you got liquid, swaps, FRAs, futures in domestic or foreign markets. If there's a spread, it's arbitrage, right? So I had the ideas, but I didn't have the skills. So I had a partner who basically was a really good programmer, and she programmed it in something called Symphony. Back in the 80s, we had Lotus Notes as a spreadsheet. But the big one, the best one was Symphony. And Symphony had an integrated spreadsheet, word processor, database. So she coded that up in Symphony, right? Now, fast forward, I come back from Florida. I open up EasyLanguage. And I go, oh, this is not easy. Oh, what do I do? I was so disappointed. I was trying to process it. And I thought, well, I need to be able to test my ideas. You know what? I have to go back and make some effort and learn it. And I thought, hang on, if I make a bit of extra effort, I could probably learn a tool that I could use in other things, right? So I wouldn't just be restricted to trade stations. Does that make sense? I thought I'll put a little bit of extra effort in so that I can also use it in other things. So I went back to I told you about my friends who are the brothers, who are the hedge fund guys. And then I said to the other brother, I said, do you want to join me on a weekend course to learn Visual Basic for application in Excel? And he said, yeah, I'd love to. I agree, Brent. This EasyLanguage isn't so easy. And so the older brother, or the brother I went to Florida with, I had him join me. And the first weekend course was an introduction to basically Visual Basic for applications Excel. So for anybody who has a spreadsheet, if you hit Alt F11, the Visual Basic editor pops up. So everybody who's got a spreadsheet, you actually have a coding tool sitting under your spreadsheet, right? And so, Andrew and I did that, and then we spent a couple of weeks just building on what we learned, and then we did the intermediate Visual Basic for application course for Excel with the same training company in Sydney. And so we did another weekend together, and off we went. And I'm a failure compared to these guys. I mean, they're managing 5 billion, and I'm sure they've moved on from VBA, but I'm still with VBA. And I tell you that is also a really important thing that I feel that is sure. Going to Bank of America, coming across Jeff Morgan, really, really important for me. But also as important is my ability to independently code up trading ideas. So everything you see in my books, everything you see on my website, all comes from Microsoft Excel, just workbooks. But what I do is I jump under the workbooks. I jump into the Visual Basic application editor, and I code everything up in Visual Basic. Yeah, and so I haven't been confined or restricted by what my particular third-party program can do for me. So I've only been restricted by my imagination. So if I think of something, I generally can program it and I can test it. And it's been a huge, look, joining Bank of America and seeing Jeff Morgan, obviously, are very important to where I am today. But just as important, and probably more important, is that, sure, Bank of America introduced me to the markets. Jeff Morgan saved me from myself to say, hey, Brent, just go look for evidence. That's all. Just look for evidence. It's not a difficult idea. Just look for evidence, right? And then I started looking for evidence, and I did it independently, all by myself, but only because I learned how to code in Visual Basic for applications. And I'm not recommending people do what I do. I actually show people how I program in Visual Basic for applications on my website. So if they go to indextrader.com.au, you'll see a tag called software, and then on that submenu you'll see VBA and how I do it. Yeah.
I think that's a really important point you're making, Brent, about choosing something that works for you. I see a lot, especially beginners who spend so much time, their focus is on which platform should I use, which indicators are the best ones, how fast do I need my CPU to be, and then they're so focused on these other things that they've forgotten that they're actually here for trading. What I like about what you're saying is, well, really, you had these ideas. The ideas were the main thing. Now, how can I test them? I just need whatever's going to work for me, and I just went and did a VBA course or whatever, and that's that, right? So I think you're, what you're saying is really about focusing more on the trading, and don't worry about what the platform is, what the coding is. Whatever works for you is what works for you. So
yeah, and having a really good sounding board like this Mentor They can just put things into perspective. Yeah. It's difficult to do this by yourself. Maybe that's a key message, is that it's very difficult to succeed by yourself. I'm sure there are obviously people that have, but if you can introduce, the words you mentioned, transparency and accountability, that would be a big help for people who will just keep them, keep them focused on what's important.
Yep. And along that transparency, actually, you're probably just trying to think, if you're probably one of the only people I know that actually puts their live trading results on their website. The good, the bad, the ugly. I know you've been through some pretty ugly looking drawdowns in the past, and they still go up there, and you explain what's happening. I think that's a really key part of what you do, is the transparency.
And I got into this educational lane all purely by accident. I didn't set out to become an educator. I just got upset with the guy who was promoting his course, and I just said, well, that's fine, but can you demonstrate that you actually trade what you teach? And he couldn't. So I said, I'm going to go off, get licensed. I'm going to make available a simple mechanical system. I'm going to trade it and make it available my real-time results. And it's all about, as you mentioned, it's all about transparency.
Yeah, that's right. Now, actually, I'm talking about that. I know you've got a workshop coming up. I think, is it this weekend? Do you want to,
this weekend,
for people who might be interested in learning more about that, can you explain that quickly?
Oh, sure. I hold an annual workshop once a year, and it's usually at the end of the year, the end of November. So it's this weekend. If people go to my website, which is indextrader.com.au, all the information is there. It's a full weekend workshop where basically I'm teaching my universal trader short-term methodology. So it's a methodology which combines both trend trading, counter trend trading over a short-term time frame. After the workshop, people will have 6 months access to the video recordings. They'll get the manuals to keep, and then I follow that up with 90 days of live trading, where they get to watch their teacher and me, trade the strategies I teach live for 90 days in real markets with real money. And if people are curious or are interested in attending and would like to attend it, I'm happy to give the Better System Trader viewees a discount. And so if they'd like to receive a 10% discount code, they'll need to contact me. So you can go to my website, indextrader.com.au. You'll see there's a contact page. Contact me and say, hi, Brent. I saw you on the Better System podcast. I'm interested in your workshop. Could you kindly send me the discount code for Better System Trader, and I'll send them the discount code to give them a 10% discount.
Oh, thank you very much, Brent. That's very generous of you to offer the listeners a discount for the workshop. So
no worries.
Thank you very much. I can say I'm not going to this workshop, but I've been to Brent's workshops in the past, and they're very very valuable, very insightful. So go and check it out. There's a link up there on the screen, indextrader.com.au. All right, Brent. Well, thank you very much for your time today. It was really good digging into those 3, I guess, defining moments. You've probably got a lot more in your career. I know you've had a pretty interesting and successful career so far, and I'm sure more to come. But thanks for sharing those 3.
These were the main forks in my journey. These are the main forks.
Yeah. So thank you for doing that. And for anyone who's listening or watching, or if you're watching, please give us a thumbs up for this video, and let us know that you enjoyed all the great nuggets of wisdom that Brent shared with us today. And don't forget to hit the subscribe button and bell so you're notified when we release new content. All right, Brent. Well, before we go, do you have any closing words?
No, just thank you for the opportunity. And, thank you for allowing me to reminisce how I started. And for me, I was very lucky, but other people, they can definitely, I think, put your resume into an institution, try and see what the average person is doing wrong on the other side. And the big takeaway is if you can, get a mentor. Somebody who's trading each day, and they don't have to be the world's best trader, but somebody who's chipping away and they will be invaluable to you, because it is very difficult to do this by yourself without insights from a wise mind. So I'd suggest people, if they can, reach out and embrace a mentor if they can. It will make their journey less bumpy.
Yep. All right. Well said, and what an excellent way to finish the show. So thanks again, Brent, and all the best.
No worries, and thank you. Bye-bye.
Cheers.